what it's asking you is, what do you trade the most of? Stocks, options, futures, or Forex? So options and futures are pretty close, about 10% apart. And all right, so let's count this down. 70% of you have voted. Let's see if we can get it up there around 80%. So we'll do a countdown here. 10. That's the longest 10 count, right? 9, 8. Futures equals futures. Yeah, I told you I was dyslexic. So yeah, F-U-T-U-R-E-S means futures. I just typed it real quick before this webinar. If you are a spelling Nazi, you're gonna love me because my stuff has typos all over it. So 8, 7, 6, 5, 4, 3, 2, and 1. All right, so we're gonna close that poll out there. And all right, so you should see that big eye on the screen again. I'm going to erase the little ink that I put up there, and we'll get started. All right. So welcome to this webinar. My name is Hubert Centers. I'm the founder, obviously, of Hubert Centers. I actually co-founded several different trading companies. I have my own futures brokerage, IB. I'm one of the original founders of Trade the Markets, one of the most successful trading education companies out there. I'm going to be talking to you particularly tonight about how to risk $156.25 to be exact to potentially, and I always have to say potentially because I like to sleep at night. There is no guarantees in trading as there is no guarantees in life. And plus I'm also registered. I'm a Series 3 and a Series 30. So I got to say potentially a lot. So a lot of the stuff that I'll tell you, and I'll tell you a risk disclaimer here in just a second, and we'll get that out of the way. So the title of the presentation is How to Risk Only $156.25 to Potentially Make $1,000. So before we get there, this should be 100. So see what this poll comes up. It says, would you risk 156 to make 100? Obviously you wouldn't do that, right? Add another 0 on there for me. Would you, as a trader, not 100, but 1,000? Would you risk $156 to make 1,000? It should have an extra 0 on there. It does not because, like I said, it's got a typo in there. Would you risk $156 to make $1,000? So most of you, over 80% of you right now, are answering yes, you would. That's a good answer. That means you actually got a decent shot of making it as a trader. Now, what the follow-up question is probably going to ask you is you're going to be like, well, yeah, how do you do that? What's the percentage? That's the wrong question to ask. Like if, and I'll get into this a little bit later in the presentation. So 80% said yes. That's awesome. So I'm going to close this down. Before we get, so let's see if we can do one more test here. So take your hands and put them down on the desk. There was a study done by, I think it's Psychology Today. If you take your hands down and put them on the desk, you're probably going to see a pinky. Well, that's a sharp little pinky right there, isn't it? And then you're going to see this finger, and then you're going to see, Lord have mercy, I'm going to have to start my drawing up. It's like I'm drawing like a third grader here. Let's do it like this. I'm going to just draw my hand. So let's say you had this right here. All right, that makes sense. Looks like a hand, right? Let's make this my thumb. If this finger, which is your middle finger, is longer than your ring finger, so this is your ring finger, all right, on either hand, this is number 1 finger, this is 2, this is 3, this is 4, and this is your thumb over here. All right. If your number 2 finger, the one you communicate in traffic with, is longer than your ring finger, first, is it yes or no? Is your middle finger, your traffic communication finger, longer than your ring finger? So there's a study done in Psychology Today based upon a lot of pit traders. All right, so that's good. What that means is when you were in your mother's womb, you were exposed to more. Oh, same length. You got no shot. That's terrible. No shot at all of making it as a trader. That's not really what it means, but it means that you were exposed to more testosterone in your mother's womb than other people were. And it also means that you're a little bit more of a risk taker. You probably like being an entrepreneur, and you actually. And hold on just a second here. There you go. And you may have, you might be a little bit more of a risk taker and willing to take a little bit more risk. So that means you got a decent shot of making it as a trader. So it's a little trivia for you there. So let's take a look at the next slide here and let's get started. Before we get started, I've got to give you a little bit of a disclaimer and the warning. So warning, trading can be dangerous to your wealth. If you don't know what you're doing, it is very dangerous. CFTC Rule 1441 or 4.41, hypothetical or simulated performance results have certain limitations. I'm going to be going over with you some back testing, some forward testing, and some trades that I did with my real money. But before we get started, I have to tell you that you're probably going to lose all of your money trying to learn how to trade. It's very, very important that you don't trade with more money than you can afford to lose. And there's no sense in you trying to trade your retirement account to $1 million if you're starting with 10,000. I'm not saying it can't be done. I'm just saying that the odds are stacked against you. So just give me an I agree, I understand that trading is very risky. Just say I agree in the chat box there. Some people are saying, got it. I've already done that twice. All right. So this presentation is going to be a little bit weird. My name is Hubert Centers, and this is my no BS approach to trading and investing. Now, it's going to be a little different and a little weird, but in a good way, okay? So I usually don't pull any punches. I'm not going to blow smoke up your rear end to convince you into doing anything. What I'm going to try to do is show you what I feel is a better way for you to trade and make money, okay? But before we start, let's talk about some of the things that have happened recently in the past, like the NASDAQ 3-hour flash freeze, the flash crash and all that stuff. Since a lot of you, and the CBOE outage, a lot of you told me that you traded the futures and options, okay? So what you want to do here is you got to know a little bit about hedging 101. So what I'm going to be talking about is more futures than anything, and in particular, I'm going to be talking about bond futures. How many in here have never traded a bond future? Like a 30-year bond or a 10-year note? Never. All right, so this is going to be really cool because most people that trade futures don't even know that you can trade bonds, or they think it's like a grandma market, like, oh, you talking about like CDs and notes and bonds and stuff like that? And nothing could be further from the truth. They're great trading instruments. If you know how to trade them, they have a special personality and a style that may resonate with you. So when you're trading futures, I love trading futures because they have some advantages. They have the 60-40 tax advantage. But let's talk a little bit about hedging 101. It's very, very liquid. The bond market is one of the most liquid markets in the world. So if you're going to do futures, one advantage it has over stocks and or options is they're open, 23 hours and 15 minutes. Okay, a lot of the markets are. Some of them are that high that they trade. So if you're, this is not about trading stocks. This is not about trading stocks, but if you trade stocks, you got to know how to hedge with futures. If you don't, you're going to get smoked. So let's pretend that on the flash freeze, let's say you were long Google, okay? You were long Google and the flash freeze and the NASDAQ when it just locked up on the CBOE or the NASDAQ, let's say that Google continued to go higher and you were long. If you were long Google and the NASDAQ exchange went higher, then you don't have to do anything. You're perfectly fine because if you're long and Google goes up, you're making money. Now, if you're long Google and Google starts to go lower, you're getting smoked on your stock position and you need to hedge with that. So what you'll want to do is since Google's going lower, all right, that probably means that the NASDAQ's going lower too. So what you would want to do to hedge is you would short some NASDAQ futures. You could do it with the NASDAQ, the YM, you could do it with the ES, you could do it with the Russell. But since you're in Google and it's on the NASDAQ exchange, you'd want to short that, okay? So just keep that in the mind when you're trading stocks or options. Futures are a great way to hedge because they're not as gappy as stocks and options, okay? I just went through that. I just put it on the chart. So now I gave you the scare tactic of I don't think that you're going to make any money trading the markets, right? I think you're going to lose a lot of money. That's not entirely 100% what I believe, though. I was born and raised in eastern Kentucky in a poor coal mining town, and I was fortunate enough and worked hard enough. So now that if I want to, I can go hang around very wealthy and famous people. I actually help advise her on some of her investments. I help this guy with his charity, and then this guy's me. I actually show up for a couple of reasons. I'm trying to continue to lose a little bit of weight. Here I've got, I think, 1, 2, 3 chins. Here I'm down to about 2. I never dress like this, though. This is just for like a photo shoot, a headshot, which I have no idea why I even do them. This is the microphone that I'm speaking into, and then this is my trade desk at the super secret headquarters, where it's 24-inch LCDs. I've got 6 of them on one computer, and then I've got another 10 or 15 monitors around me. I'm from Georgetown, Kentucky. Where are you from? Currently, I live in local areas called Versailles. Everywhere else in the world, it's pronounced Versailles, obviously. So I do 100% believe that the more successful people that you hang around, more of that stuff will definitely rub off on you. So you're probably the net average of the 5 most people that you hang around the most. So like I said, I'm in masterminds with this guy. I'm in a mastermind with this guy. This guy over here, he's crazy. He has no idea what he's doing. So I do want to give you a little bit of a pep talk there. You can do it if you just focus and get around other people and you model what they do. So congratulations, you're in the right place at the right time. I do know how to trade, so I'm going to show you my special blend of trading. So let's do a little quick math first before we get started. So the trade that I'm going to teach you only works 41.3% of the time, okay? It only works 41.3% of the time. Now what you're going to do is you're going to risk $156.25 to potentially make $1,000. All right. Now it's only going to work 41.3% of the time. How many times? Let's do some quick math. I'm going to whip out my iPhone here, and we're going to say we're going to do 10 trades. Okay. And there's my password. All right. Now I'm going to do it right here, real quick on my phone, and we're going to say this right here. We are going to say that out of 10 trades, there's only going to be 4 winners, and there's going to be, I would say that's going to be 6 losers, right? So if we go 156.25 times 4, what is that? So we're going to go 156.25 times 4. That's going to be what? 625? 625 plus or minus something, all right? And now we're going to go 6 times 1,000. I can even do that up in my head. That's going to be 6,000, right? Now what's that come to if we do the math? If we go 6,000 minus 625 comes to, that can't be right, $5,375, right? Can't be right. Should be 4,000. Am I doing it backwards? Look here. The good thing is I've already done the math. That's awesome. I never have to write it again. I don't even know why I'm adding. So here's how it works. We're going to say we had 6 losing trades. I'm doing it backwards. So you don't even have to know how to do math in order to do this trade. If I did do it backwards, it would be even better, right? More money that way, right? Backwards, right? So here, let's do it again. So 6 losing trades times 156, I'm going to lose $936. So it's good that you are all paying attention. And then what we're going to do is we're going to have 4 winning trades of $1,000, and we're going to make $4,000 out of 10 trades. So that's going to come to a net of $3,064, okay? So now that you know that if you risk 156, you could potentially make 1,000. Is the 156 a max? Is it a max or it's a stop? It's a stop. That's how much we're going to risk on every single trade that we take. So now the secret little question here is, how many days would you do this trade if you could do this trade? How many days would you do this? How many days a week? Like 1, 2, 5. So the answer is every day that ends in Y is the correct answer. Every day that ends in Y. Now you're probably saying, man, 41% is not very good. You're right, it's not very good at all. But let's say it's worse. All right. Let's say it only worked 3 times out of 10. So you had 7 losing trades, and you lost 156. That'd be 1,092. And then you had 3 winning trades for $1,000. That's $3,000. So you'd still come out in net 1908. I mean, that's terrible for only working, 3 times out of 10, right? Now, obviously, I'm trying to be a little funny here, because even though the percentage sucks, the risk to reward is so high that it makes sense to do it, right? So we really only have to do that. We could just do this trade 1 time, be right 1 time, and we would probably still be okay. 2 times is even better. So there are 5 stages of traders, and every trader goes through this. You don't always start at the beginning stage, but here they are. First, you learn how to lose lots of money. Then you learn how to lose little bits of money. So first you lose lots of money. Then you learn how to lose little bits of money. And then stage 3 is where a lot of people get stuck, and they end up treading water, where they either make a little, or they lose a little, or they make a lot, or they lose a lot, okay? And then stage 4 is where you start putting all the pieces together, and then you start consistently making some cash, and your P&L starts to grow kind of systematically. And then stage 5, asterisks, I'm registered, making a killing depends on what you think making a killing is. Maybe it's $200 a day, maybe it's $2,000 a week, maybe it's $20,000 a month, maybe it's $200,000 a month. I don't know what your killing is. So, and here's one thing that I do want to tell you. Like, a lot of people think that success in trading and or life works like this. They think that you're gonna start here. So you're gonna start here, it's T-A-R-T, and then you're successful up here. And they think what happens is you just go in either a straight line, or you go like this. You go, oh, well, yes, I'm just gradually making progress here to my successful obtaining of my goal. And here's how success really works. You have a start here, and then you have a successful goal here. And there is, you would think it'd be a straight line, but it's not. What happens is it goes like this. You go like this, you get off, you go a little higher, and then you go like that, and you get sidetracked, and then you back down again, and then it ends like that. So that's more realistic interpretation of how success works. I've never met anybody that goes straight to nothing to successful, or straight from nothing to making a lot of money trading. So just keep that in mind. So let's do another real quick poll. Just out of curiosity, what stage are you in right now? Do me a solid there and do a vote if you don't mind. What stage are you in now? Are you in stage 1, losing lots of money, which that stage always hurts a little bit? Are you at stage 2, where you're losing a little bit of money? You've learned how to just cut the losses a little. Are you in stage 3, where you're treading water, where most people get stuck at? So you're making a lot, losing a lot, or making a little, losing a little? Or you're in stage 4, where you're consistently making cash flow? Or are you at stage 5, where you're just killing it? All right, so vote on the screen. 52% of you have voted. I'm going to do a countdown from 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right, I'm going to close the poll. So 65% of you are at stage 3, 19% of you are at stage 2, and 11% of you are at stage 4, and 6% of you are on stage 1, and 0% are making a killing. So that's good. So I do have some good news and bad news for you. So I've been trading for about 18 years. I originally started with a guy where I just did a 2-year apprenticeship. And how I started out is I made $5,000. I turned that into $12,000, and I took that $12,000, I cut that in half and threw up on my second trade because I lost most of my account. And then I helped the guy that was running a little mini hedge fund take a $25,000 account and build it up to about $868,000 in a little less than 18 months. So I know how to make money. I also know how to lose money. I've never made more than $3 million a year trading. So if you're looking to make more than $3 million in a year trading, I'm not your guy. I'm not that cat. I'm not the guy that knows how to make $6 million a year trading. If you're looking from 0 to 3 or 6 figures, I'm that guy. That's what I'm good at. So, all right, so now we know what stage you're in. So now let's talk about what style are you. So there's 3 main styles to make money in the markets. Most of the people do it like this. What they'll do is they'll have big losers followed by, so you'll come out, you'll have a big loser followed by a little gain, 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 and then followed by a little gain, and then they'll have another big loser followed by little winner, little winner, little winner, little winner, followed by a massive loss. So that's style A. So that's style A. Style B is how I trade. So what I do is I have this right here going for me. I have little loss, 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 and then I get lucky and I get this massive gain, and then I give some of it back in a bunch of little losses, and then boom, another big gain, and then another series of tiny little losses, and sometimes they get a lot of them, and then I get another big win. Okay, now C is like this, where you lose a lot, and then you lose a little bit, and then you lose a lot more, and then you lose a little bit more, and then you start questioning why you're doing this, and then you lose a lot more. So let's do one more poll. Okay, we're going to do one more poll. We are going to say, what style are you? What style are you? Are you style A, B, or C? Are you style A, B, or C? Are you doing little winners and big losers? Are you eating like an elephant? Taking big losses? It's A, B, or C. Little winners, big losers, big winners, little losers, or big losers and little losers. All right. So I'm going to show you, if you suffer from A, I'm going to show you how you can transition to B. And in my opinion, B is a better way to trade. All right. So I'm going to show you, if you're interested, I'm going to show you that tonight. So if you suffer from C, you're probably going to look like this guy. You probably have, bloodshot eyes. You're probably screaming a lot. You're probably not sleeping much. And it's just a tough place to be. So let's first talk about a little bit. I got to close the poll. There you go. There you go. I forgot to show you little man here. So little man, if you're suffering from C, you probably suffer from bloodshot eyes. You're screaming. You're probably crying a lot, right? You probably cry a lot. You never get any sleep. So C's a tough place to be. A's not bad. B's better, okay? And C's just terrible. So let's talk about how to get you from A, moving over to B, and get you away from all those others. You need an A and a half, little winners, little losers. So I'm going to tell you a little story about pot roast. Now you're sitting there going, this guy hasn't taught me anything yet. What in the love of goodness is he talking about? So I'm going to tell you a little story about pot roast, which is a good analogy for trading. So my wife's name's Lisa, and I'm going to use Kelly as the other person. She helps me manage things here at the office. So Lisa's fixing supper, and Kelly comes over and helps her, and she goes, all right, we're making pot roast tonight. So this is our recipe for pot roast. Like, you take a pot roast, you put some carrots and potatoes and some salt and some pepper, and then there's this pan that we use, and she cuts the end off of the pot roast here and cuts the end off the pot roast here, uses some oregano. It looks like a brownie. That's funny. And you cut the end of the pot roast off before you put it into the oven. And then, so Lisa's telling Kelly how to do it, and Kelly goes, okay, I got a question, Lisa. Why do you cut the ends off the pot roast? And she goes, I don't know. That's how my mom taught me how to make pot roast, so that's how we do it. So the next time Lisa goes over to her mom, she goes, hey, Mom, tell me the recipe. Tell me the recipe for the pot roast. What we go through. Well, you use carrots and potatoes, salt and pepper, garlic, oregano, a little thyme. Then you cut the ends of the pot roast off, put it in the pan, and then put the pan in the oven. And she goes, okay, that's the part I don't understand, Mom. Why do we do that part? And then Lisa's mom goes, I don't know. Let's go ask my mom. And then they go over to the grandma's house, and Grandma goes, all right, so here's the recipe for pot roast. You carrots, peas, garlic, oregano, thyme, salt, pepper, and then you take the pan, and you cut the pot roast off in half right here. You cut the ends off before you place it in the pan, and then you put the pan in the oven. They're like, okay, that's the part we don't understand. Why did you do that part? And she's like, oh, honey, back in the day, me and your father didn't have any money. I only had one pan. The pot roast wouldn't fit in the pan. So what I would do is I'd cut the edges off the pot roast to make it fit in the pan. So you may be doing some of that same stuff in your trading, where you're doing something that's been passed down to you that you don't even know is wrong. So we're going to talk about some of those things. So if I asked you what is the best market to trade, if I asked you what is the best market to trade, what would your answer be? Okay. Now, if you ask, you would probably get a lot of people give you a bunch of, yep, see, I'm getting a lot of them, E-minis, I don't know for sure, gold, bonds, crude, the one that moves, wherever it's going to make money, NASDAQ options, S&P minis. A lot of people would probably tell you the S&P minis just because it's a real popular market. Yeah, any that move, the trend, the most liquid ones, right? Probably bonds, probably futures. So you'll probably get a lot of answers, but the majority of the answers when I poll people is it's the S&P minis. Now, then what happens is most people will tell you that because it's got the most volume and everyone trades them, and then you start going, okay, that's interesting. And then what happens is then you trade them, you get chopped up in them, and you start to ask the question, what am I doing wrong? Why can't I do this? I'm smart, I'm successful, but this thing is just too dang hard. I think it's rigged because all I do is lose money. So the bad news is you have been betrayed. And when I say betrayed, I don't mean somebody actually screwed you over on purpose. What I mean is it's not your fault. You've been lied to. And then you're going to ask me the question like, okay, who are they? Who's lied to me? Okay, and they are other traders, the media, investors, and it's passed down from generation to generation, from trader to trader, to investor. My question to you is, did you test this? Did you test which market matches your personality and your individual trading style, or did you just believe it? Did you just believe it, or did you test it? And there's nothing wrong with trusting people. I probably trust people to a fault. Until you screw me over, and then I'm like, shame on me, and then shame on you, and then shame on me. I'll give you 3 shots on anything. So anything that I tell you today, you can trust, but make sure you verify and test everything that I tell you to make sure that it works for you. All right. So I want to tell you one more story, and then I'm going to get started teaching you how this trade actually works. So it's the story of it's called Aesop's Fable. It's about the frog and the scorpion. So there's this stream, all right, so here's the stream. It's going down the stream like here, and there's a frog on this side, and there's a scorpion on this side. You like my detailed drawing of the frog? Circle with an F. Scorpion is the circle with the S. So the scorpion hollers over to the frog, yells over to the frog and says, hey, frog, come over here and give me a ride over to your side of the stream. The grass is greener over there. Over here, it's nothing but sand and dirt. And the frog goes, you've lost your mind. You will sting me and then eat me, and I will die. And he goes, no. Why would I do that? If I sting you, we will both sink to our deaths as we drown in the stream. And then the frog goes, all right, you got a point. So the frog swims over to this side. Scorpion jumps on his back, and now you've got the frog and the scorpion swimming across the stream. And then as they get about halfway over, the frog feels the scorpion sting him in the back. And he's like, oh, why would you do that? He looks up to the scorpion, and the scorpion's like, I guess it's just in my nature. So if you're losing money trading a market, it might be that you're just trading a market that doesn't fit your nature, or that's the nature of the market where it run, stops, reverse, and you need to trade something that's more like an Energizer Bunny or a marathon runner, okay? So I want to ask you something on another poll here. So let me see here. True or false? If you can trade, true or false, you should have a poll on your screen. If you can trade any market. True or false? What do you believe? Oh, it's neck and neck. 50%, 54-48, 52-48, 52-48, 55-45, 51, 52-48. Oh, it's still neck and neck. 53, 47, neck and neck. True and false? All right. So let's do a countdown. 5, 4, 3, 2, 1. So true rang out at 1 with 54% of the vote, and 46 closed it up with 46% of the vote. All right, so I would say that the answer is probably true, but, and there's always a but when I say true. it's a lot easier to trade something that matches your trading style and your personality. So I think it's true. Yeah, if you can trade, you should be able to trade any market. Once you learn, how markets really work and the dynamics of each market, you should be able to trade market. But if you find something that matches your personality and style better than another market, and you're just in sync with it, it'll just make the process a whole lot more easier and enjoyable. So if you don't match your trading style to the right market, it's going to be painful and very frustrating. Trading the wrong market with the wrong style for you is like hitting yourself in the head with a hammer. It's going to feel great once you stop. Okay? I'm going to say it one more time. Trading the wrong market or the wrong style for you is like hitting yourself in the head with a hammer. It's going to feel great once you stop. So let's think about this statement. What is wrong with trading better faster? Is there anything wrong with that? Is there anything wrong with trading better faster? So I'm getting a lot of no's, so that's good. Good answers. All right, so let's talk about how to pick the best market for you to trade. Not for me to trade, but for you to trade. And we're going to go through a simple process. So the first thing we're going to do is we're going to look at the average true range. Who in here does not know? You may not understand the concepts. That's right. You may not understand the concepts. Who in here does not know what the average true range is? If you don't know, I'll give you a quick definition so we're all on the same page. All right, so average true range. Average true range, we're going to use a 14 period. And all that means on the average true range is that on an average true range, you're going to take 14 periods. You're going to take 14 periods, and it's going to look back. Since we're looking at a daily chart, it's going to tell you how many bars it's looking back. It's looking back 14 bars. And that's going to give you from the low to the high or from the high to the low. So this is the daily range that thing's going to trade. So the Dow right now is currently 183 points. It's multiplied times $5 a point. So you're going to make or lose $915. Does that make sense? So the S&P, 22 points times $50, $1,121. NASDAQ, 47 points times 20, plus or minus $955 a day. Russell, 17 points basically, $100, $16.99. The problem with these four markets right here, these are all index futures, and they go like, is that from the high to the low? Yeah, that's from either the high to the low or the low to the high. The problem with these suckers here is they go like this. They go like this. They go run, stop, reverse, run, stop, reverse, run, stop, reverse, run, stop, reverse, run, stop, reverse. And about the time you figure them out, break away, nope, run, stop, reverse. Anybody experienced that with the E-minis, with the Dow, S&P, NASDAQ, or the Russell, where they just chop you up? About the time you think you got them figured out, they just turn on the dime and come after you to hunt you down and kill you, right? Why is that? It's not that they're evil. It's because that's their nature, right? They're scorpions. They're going to sting you. They're designed to sting you. They're not designed to get you to the other side of the stream. But what they're designed to do is sting you and kill you. Now, let's take a look at the 30-year bond. The 30-year bond moves about a point a day. It's $1,000 a point, and you're going to make or lose. You're going to make or lose about $967 in a day. Crude oil, on the other hand, moves about 2 points. It's about $1,000. It's about $19.40 in a day. Crude oil is bipolar, very hard to trade until you get some of these other markets underneath your belt. Now, we'll tell you on the 30-year bond, it goes like this. It goes up, retraces, up, retraces, up, retraces, up, and then it'll retrace, and then it goes up, retraces, up, retraces, up, retraces, and then comes back down again. So it's a little bit more calm to trade. It's methodical in nature, okay? Gold, another good market. So I really enjoy the 30-year bond. Also, I'm a big, huge fan of gold. Gold is moving $31 right now. Gold is about $25 based upon today's range. It moves about $100. It's $100 a point, and it's $3,159. Good trader. Gold goes like this. It goes breakaway, consolidate, breakaway, consolidate, breakaway, breakaway, and then it pulls back. So that's how gold does. So gold and bonds by far are two of my favorite markets because they fit my personality well. I'm a trend trader that likes to buy pullbacks and breakouts. That's my style, so I like to trade those. Silver's the Widowmaker. It's crazy. You got to be careful with it. $5,000 a point, but it'll rip your head off. Aussie dollar, a good trader, and the euro dollar, a good trader. So one of the reasons I'm going to focus on the 30-year bond is because it's an easier way, in my opinion, for you to trade. So let's take a look at that. And so why trade bonds and notes? Because you're going to hold on to a winner a little bit longer. So if you were able to hold on to winners just a little bit longer or a lot longer, it is my belief that you'll make more money. Silver is very volatile. Silver will rip your head off. So we've already established that you got to figure out whether you're a sprinter or a marathon trader. So this would be a counter trend trade, and this would be a trend trade. So sprinting markets would be index futures, YM, ES, NASDAQ, Russell, crude oil, silver to effect, natural gas, stuff like that. And that's because the E-minis go like this. The E-minis, I'll scratch these out. E-minis go run, stop, reverse, run, stop, reverse, run, stop, reverse. Crude oil, this is how crude oil acts. Crude oil will break away, consolidate, break away, come back, run, stop, reverse, act like it's going to sell off, and then run, stop, reverse. Silver's a little bit crazy. Natural gas is a little bit crazy. Like I said, bonds will go like this. The bond market, they go like this. They break away, controlled pullback, break away, controlled pullback, break away, and consolidates. Gold will go like this. Gold will go break away, consolidate, break away, consolidate, break away, and then they'll pull back. So which one do you think is easier to trade, Group A or Group B? Obviously, you're going to say Group B, right? So we've covered that. So what I'm trying to do is I'm trying to show you why I think you're going to be better off trading something different than what you're trading right now. So we've already covered that. So now what we're going to do is we're going to talk about the basics of bond trading. So if I could teach you one trade on how to risk $156 to make $1,000, first what I want to do is, because not everybody probably trades futures in here, I know a lot of you do, but I'm going to give you a bond basics 101 class really quick. Now, there's bonds and there's notes. So there's a 30-year bond, there's a 10-year note, there's a 5-year note, and then there's a 2-year note. I don't have enough time to cover all of them, so I'm just going to cover one. So we're going to talk about the months they trade, the time, cautionary periods, the symbol, the tick values, and how to use DOM. And we're going to talk about margins, and we're going to talk about the overnight bond trade, and we'll also talk about the first hour trade or the sneak attack, either one of those. All right, so these are the letter of the months for futures. I have no idea what cat in the world or what guy or female came up with the letter schematic for January is F. Makes no sense. And I usually do a joke about like why? Can anybody tell me who did this? Surely to God they lost their job, right? Because, I mean, December, I got it. It kind of sounds like Z, but August, there's not a Q in August. They're not even in alphabetical order. It's the same person, I guess, that made the keyboard, right? So these are the months of futures that have different futures months. These are the letter symbols. You really don't need to know all of them. For trading bonds, if you trade the E-minis, then you probably already know enough information to trade the bonds. So here's how the bonds work. HMUZ. It's the same as the E-minis. It's March, June, SEP, and then DECE. Obviously, if I hit my button one more time, maybe. There you go, DECE. So here's how it works. If you've never traded futures, what you're going to do is this is going to be USH13, and it looks like it'll say USH13. All that means is this is the symbol, this is the month, and this is the year. Okay. So here's how futures work. So right now we're trading US Z or Z13. We're going to do that until the second week in December. In the second week of September, we started trading December. That's why they call it a future. All right. In the second week in December, we're going to start trading the March contract, and it'll be called USH14. In the second week in March, we'll start trading June, and it'll be called USM14. Got it? For the ES, yeah, it's ESZ13. That's right. Any questions so far? I'm going to keep on rolling and hopefully you're getting most of this. So we've already covered that. So the bond market works like this. It opens up at 5 p.m. Okay, and it closes at 6 p.m. Does this mean it's open an hour or it's open 23 hours? It's open 23 hours. Open outcry in the bond where the pit guys, where those dinosaurs that still trade in the pit, it opens up at 8:30 and closes at 3 o'clock. This is the pit. And the bond market used to be one of the biggest pits in the world, and it's gone the way of every other pit where there's just not a whole lot of people in the pit anymore. So this is how the bonds work, okay? So on the 30-year bond, okay, it opens up at 5, it ends at 5 every day, and it opens up at 6. It's worth $1,000 a point. It moves in 1/30 seconds. This is the hard part. So electronic is more efficient. That's exactly right. The bonds move in 1/30 seconds. And for all of you people that suck at math like me, that's called a fraction. Back in the 90s, we had these things called fractions in stocks. It would go 9/16, 7/8, and stuff like that. And you had to cheat and put a Post-it note on your screen to go, is 5/8 better than 7/16? Yes, it is. Okay, that's a good trade. So every minimum move is worth $31.25. Now that looks complicated, but I've got a slide that's going to explain all this to you really quickly. So we're going to talk about the times that you need to be concerned are around FOMC, around interest rate announcements, any other major market news. So you can use a calendar called Econoday, ECONODAY, and that'll help you kind of avoid some landmines. So the tick values for the 30-year is one tick is worth $31.25. I'm going to skip to a slide that I think is going to make a lot more sense to you. I use a couple different brokers. For TradeStation, the symbol is USH13, so right now it's USZ13. And then for Infinity, they use the symbol ZB for the bond, so it's ZBZ13. So it depends on what brokerage firm you use. And just out of curiosity, what brokerage firm do you guys use? I don't know what you use. I use TradeStation, TOS, eSignal, Infinity. I use a bunch of different ones, okay? AMP, OEC. All right, so we've got a little bit of a mix of everything. So TOS, you can just go /ZB. That'll do you there, and they'll take care of that for you. Interactive Brokers, TOS. Infinity, I'm testing Infinity currently, Progressive with NinjaTrader. Infinity's good crew. I like those guys. All right, so just check with your broker, and they'll tell you which one you need. All right, so this is the most important. This is the most important slide in order for you not to get lost. So I'm going to show you how bonds actually work. So first off, a bond is nothing but a future. It's not anything exotic. It's just like an E-mini. It trades. It trades electronically on an exchange. Is it available on TOS? Yes, it's available on TOS. It's just a 30-year bond. It's /ZB. When you're looking at the matrix, this is as complicated as it's going to get. So just pay attention here. So we're going to pretend that you're going to get long here at 135. Does everyone see this? This long where I've got you long at 135? If you go long one contract, okay, and it goes from 135 to 135 and 1/32, how much money are you going to make if you're long? We are $31.25. Okay. Now, if you go to 135 to 135 and 2/32, how much money are you going to make? $31.25 times 2, $62.50. All right. So these things trade in fractions. So from 135 to 136, from this to here is 1 full point. Okay. I'm going to do it on this side because the red kind of gets in there. So that's 1 full point. Do you see that? That has to move 32 30-seconds. 32. That's a full point, right? Do you remember from the slide earlier, how much did I say bonds move in a day? Anybody remember from memory? Yeah, about a point, about $1,000 a day. So that's $1,000 that you have the potential to do. Now, the cool thing about these things is they're very methodical. Now, look at the size. You can see that they are very deep and they're very thick. So they're very liquid, okay? Now, they look a little bit different on different applications. So this over here is TradeStation, and this over here is Infinity. In TradeStation, they'll say it's 1:31 and 31/30 seconds. And on Infinity, they'll use decimals. They'll say it's like 133.12. That really just means 1:33:12:30 seconds. Like this 1:33 and 21, that means 21:30 seconds. Does that make sense? So you now know pretty well how bonds move. So now what we're going to do is we're going to talk about the margins. How much money is 1 point? 1 point would be $1,000. If you go from 131 to 132 and you get all 32 ticks, you're going to make $1,000. You could also lose 1,000 if you're on the wrong side of it. IB does 131 and 11, so that's 131 and 11/30 seconds. All right, so first thing for intraday margin, call your broker. Most brokers will give you anywhere from $300 to $1,000 per car intraday margin, and I would say the average is probably $500 intraday margin. But be careful. I don't recommend you use a lot of leverage on anything. For the overnight, if you're going to hold overnight, it's going to cost you about $3,000. That's for the 30-year. We're not going to talk about the 10-year, the 5-year, the 2-year, although they are cheaper to trade. So one thing that I'm going to talk to you about is, let's go through this. If you initiate a bond trade at 9:30 a.m. in the morning and you hold it until 4:30, is that considered a intraday margin or an overnight margin? Intraday or overnight? Intraday, very nice. Now, if you enter a trade at 9:30 and you hold that thing till 7 o'clock at night, is that intraday margin or overnight margin? Overnight margin. Now, if you open a trade up at 6:30 p.m. and you close it out the next morning at 9:30, is that intraday or overnight? Intraday or overnight? Think about it. For most brokerage firms, believe it or not, it's intraday margin. So what we're going to do is we're going to give ourselves a full 23 hours. We're going to use intraday margin, initiate this thing overnight, place a stop of 5 ticks, and we're going to try to hold it for 23 hours. We're going to increase our odds of making that $1,000. So it's not a loophole. It's just we're playing by the rules, and we're just going to exploit every rule we can. All right, hold on just a second. I'm going to mute this mic again. There we go. All right. Now we are going to get to the next slide. As soon as I figure out how to advance it. All right. So we're going. What were you saying? There was interference. All right. So what I was saying is you're going to enter the trade in the overnight session. It's going to be charged intraday margin, and you're going to give yourself the ability to hold that trade for 23 hours. So we're going to talk about an overnight trade, and we're going to call it the 8-tick, the 12-tick. You're going to do an 8, 12, or 16-tick reversal. Here's why you're going to do this. Sorry, Hubert, are these slides available later? I don't know, Sean. We might make them available. Here's how the bonds act. The bonds will go up, and then they will retrace 8 ticks, and then they'll probably go higher. Now, if they go 8 ticks, they're probably going to continue up. They'll do another thing too. It'll go up, it'll retrace 8 ticks, or it'll retrace 12 ticks, or it'll retrace 16 ticks. And off of these zones, it'll then launch back up into its original trend. So after you get a nice little move. So they're measured moves. Like if it's in an uptrend, it'll retrace 8 ticks and then continue on up. And if it retraces more than 8, it'll go 12 and then up. More than 12, it'll go 16. So what I do is I always use the first level. Now, I don't usually use 12. I usually either do 8 or 16. In this example, I'm going to show you an 8-tick reversal. And then I'm going to risk 5 ticks, and then I'm going to use 32 ticks as a target. Does this work on a downtrend too? Yes, it does. Are taxes higher than the E-mini? Are taxes higher than the E-minis? Right. No, it's a future, so the taxes are the same as an E-mini. Okay? So let's walk through this trade setup. So reversal trade, these are some of the rules. I'm just going to show you the rules so you don't have to take the notes. We already talked about it. If it's only right 41% of the time, you're going to come out ahead 3,200. If it's worse, you're going to come out 2,064. We've already covered this, right? So this is what the trade looks like. So I want to show you this first trade. I shorted it here and I covered it here. Does anybody know what this is called? This little trade here? Can you trade this in an IRA account? Yes, you can. It's just a future, so all you do is put it in a trust. I shorted it here and I covered it here. Does anybody know what that is? Ah, yes. That's called a loss. That's right. Have you ever seen a webinar where somebody shows you a loss before? It's amazing. I lose money on something almost every day, and I don't even feel it very much, right? Because I know I've got to donate. I have to do a deposit in the market because I know I got to do at least 10 of these trades. I know that only probably 4 of them or 3 of them are going to work, so I have to do some deposits. Does anybody know what this is called? This second trade where I shorted it here and then I covered it here. Does anybody know what that's called? So that's strike 1 and that's strike 2. On these trades, I risked $156.25 and I lost $156.25 twice. Nope, I shorted it here and I covered it there. That's not a gain, that's a loss. Now, on the third trade, I shorted it here and I covered it here. Does anybody know what that's called? That's called a gain. And on this, I made $1,000. Now, I risked the same amount. I risked $156.25. That's called a profit. So out of these series of 3 trades, how much money did I make? So we're going to take $1,000 and we're going to minus 156 and then minus 156. So how much did I come out ahead? 156.25, 156.25. Somebody give me a calculation here. Don't make me grab my iPhone. All right, so I'm gonna say it's $687.50. So that's not too bad, right? And then I'm just going to continue every time that I see this trade. I'm going to do that. Now I'm going to show you how this trade works. So here's the first rule. First, you have to know on the daily chart if the bond market is going up or down. Now stick around for the end of this presentation. We're actually going to throw a bond trade on tonight, okay? And let me see if I've got a fill on it yet real quick. I have not got a fill on it yet, but I'm actually bidding right now currently for 135 and 330 seconds. So I'll show you exactly how to find this trade tonight so that you can do it. In this example, you can see we've got a massive uptrend here. You see this massive uptrend? And then in this trade, we had a trend line break here, so we started moving down. So would you say on a daily chart that the bonds in this example is an uptrend or a downtrend? Which one? Are we in up mode in this chart or down mode? Right in here. I would say down. We have confirmed that, oh my goodness, there's something wrong with the bond market. That's the first rule of the trade. So first rule, write down in the chat box, the daily trend of the bond market. Daily trend of the bond market. That's all you got to know. All right. Now, the second thing you want to know is every time if you're in a daily trend on the bond market, then what you want to do is when you have a sell-off, you're going to wait for the market to open at 6 o'clock at night. Now, you can do this intraday too. This trade can be done intraday. I'm showing you an example of how you do it overnight, but you can do it intraday too. So if you take a look here, this bond market opens up at 6 o'clock, and then you can see that I let the bond market sell off. You see this low? It sold off, and then when it sells off, how much do I want to let it bounce before I whack it in the head? How many ticks? 8 ticks, that's right. Why do I want to do that? Because it's in a massive downtrend, and it usually tends to retrace 8 ticks and then continue on its way. So I'm gonna short it here with an 8 tick bounce. So from here to here, that's 8 ticks. I'm gonna risk 5 ticks. And what's my target going to be? How many ticks is my target? I'm going to risk 5 ticks to make 32 ticks. So it's a good risk to reward trade. It doesn't take a lot of skill to do this. It just takes a little intestinal fortitude and some cojones to throw the trade on, right? It doesn't take a lot of skill. So in this example, you can see that I shorted it here. Off of this low move, it bounced up. And I was lucky enough or fortunate enough or skilled enough to hold it all the way for my $1,000. Now, why do you think that I probably held for my $1,000 profit on my little itty bitty one lot there. Did I have the opportunity to jump out of this trade at any point in time? I did, right? I did. I was in a downtrend, but right, it continued lower. Yes, small amount of risk. Now, let's say, I mean, I'm not up at 4 in the morning, so I can't rip it off here when I'm up $800 on the trade because I'm still in bed. And I also didn't see the retrace from 4 o'clock to 6 o'clock because I usually come into the office here right at around 9:30. So about this time, I'm sitting here going, well, the bond market sold off, and now it's sitting right here. I haven't lost it yet, and my target hasn't been hit, so I'm just going to let it see what it does. So we were in a massive downtrend. Overall, every little bounce looks like it's shortable, except for this one would have spooked. That one would have probably spooked me out if I didn't have a fixed target that I was going for. So let's go for it one more time. So here's the trade. So we're in a daily downtrend. The market sold off. I let it open up at 6 o'clock. The market initially pops up and then rolls down. This is the low of that overnight trade. It was 146 and 4/30 seconds. So 4 plus 8 is what? 5, 6, 7, 8, 9, 10, 11, 12. All right. So we're going to let it bounce up to 146 and 12/30 seconds. I short it there. I already have a sell stop ready. This is my stop loss right here at 146 and 17/30 seconds, 5 ticks higher. And then boom, there's the $1,000 profit. This is what it looks like on Dome. Okay. This is what it looks like on Dome. You can see that I did start to trail my stop a little bit, but I didn't trail it so aggressively where it would just choke out the trade. Do we have any serial killers in here? A serial killer is a person that gets up on a trade and then trails a stop so aggressively that you just choke out the trade. Any serial killers in here that like killing trades? Just like choking them out, right? And I know a lot of people suffer from it, and I kind of make it a joke, but try not to aggressively trail your stop. Try to loosely trail your stop. Give it enough time to let it breathe and live and grow for you. Don't choke it out. If you're always taking off that profit, you're never going to have the potential of hitting your target. So that's what that trade looks like. So you've got the first rule. So yeah, that trade right there has the 2 thumbs up seal of approval. So I showed you the one that I did right there live, and we're going to do another one here. So as a bonus, I want to show you one other trade because I know not everybody wants to hold these things overnight. So now I'm going to teach you the sneak attack trade. So everybody type in the chat box sneak attack. It's just it's a cool little intraday trade that you can do called the sneak attack. Not the sleep attack, the sneak attack. There you go. All right, so the sneak attack works like this. So the rules are from the first hour. All right, so from this hour from 7:20 to 8:20, you're going to write down. Then these are AM, and this is East Coast time. Now, when did anybody remember when I said the pit opens? When does the pit open in the bonds? What time did I say they opened? Yep, 8:20. So what we're going to do is we're going to sneak in there before those pit guys get in there. So what we're going to do is from 7:20 to 8:20, we are going to we're going to say, let's say we started here and the market did this right here, and then it did that. Okay, so we're going to mark the high and the low. All right, we're going to mark the high and the low, and as long as it's 17 ticks or less, we can do the trade. If it's 17 ticks or greater, we can't do the trade. From the first hour, from 7:20 to 8:20, if our range is 17 ticks or less, we can do the trade. If it's 17 ticks or more, we can't do the trade. Now, what we're going to do is, first, let's say same thing. Let's pretend that we're in a downtrend, okay, in a daily downtrend. We want to do shorts only on a downtrend. If we're in an uptrend, we only want to do long trades. All right. We're going to risk 5 ticks again, and then our target is going to be this range. So let's pretend that this range today was 10 ticks from 7:20 to 8:20. Rule number 1, we're in a downtrend, and we're in a 10-tick range from 7:20 to 8:20. Can we does the trade qualify for a trade? Can we do the trade, yes or no? Answer is yes, we can. It qualifies. We're going to risk our range on the thing is, now, are we going to go long or short on this trade? Long or short if we're in a daily downtrend? Shorts only, we're going to ignore longs. So what you're going to do is here is if this bond market comes down here and makes a new 1 tick low out of that range, you're going to short that range. You're going to use your 10 tick range as your target, you know, from this range, from your entry, and you're going to risk 5 ticks. Make sense? Let me give it to you in graphical representation. All right, so first thing, is this in an uptrend or a downtrend? This is the trend line. We broke it. I would say we're probably in a downtrend. Do you agree? All right. Now, this is 720 right here. This is 720. This is 820. This is our low, and this is our high. You see that? Okay. So, from 145 and 21/30 seconds, our low, to 145 and 31/30 seconds, how many ticks is that? And here you can do your math. If you suck at fractions, just look down here. 31 minus 21 equals 10. Joe, I have no idea who you are, brother, but I don't know what's up with your screen. My screen's working fine. All right, so 10 tick range. What if the range was only 3 ticks? Well, you need to have at least a 5 tick range in order for this trade to be good. Okay? At least a 5 tick range. So now what we're going to do is, since we're in a downtrend, since you're in a downtrend, then what you want to do is are we going to go long here? Because that's a potential right there. We have the potential to go long here. Are we going to do that? Yes or no? No, because why are we not going to do this trade right here? Because as traders, we like money, all right? You're only going to do that trade if you hate money. And if you're a trader, you don't hate money, you know it's a tool. Now, what you're going to do is you're going to wait until this low gets taken out right here. You see this low being taken out right there? You're going to short that. You're going to use a 5 tick stop loss, 5 ticks. And then what's your target to the downside? Anybody remember? If your range was 10 ticks from 720 to 820, then your target is going to be 10 ticks. There you go. Here's another visual representation of what I just taught you. 720 to 820. Here's your low. Here's your high. You wait for it to break down on this side. You're going to short it at 145.20 30 seconds. Your stop is going to be 145.23 30 seconds. And then your target is, boom, right here, 145 and 11/30 seconds. I am confused. I thought it had to be 17 ticks to make the trade. No. If it's 17 ticks or less from 720 to 820, you can do the trade. If this range would have been 18 ticks, you couldn't have done the trade because the bond market would have already moved a lot away from you. What is the success rate of this trade? This trade works about, it depends on what's going on in the market, but anywhere from 4 to 6 times out of 10. It depends, though, on the trend of the market. Really, it does. When it works, right? That's correct. What if the day is the day when the market tries to reverse? Well, on that day, it's called a donation. You do a deposit on that day. You don't do a withdrawal. Should it stay between 5 and 17 ticks? Yeah, it should be more than 5, but 17 ticks or less. What if you get stopped out? You wait for the next day. Yeah, if you get stopped out, you wait for the next trade. Do you only use the initial stop, no trailing stop? That's what I do. I just use the initial stop loss. So I don't really like calculating all this up. So what I do is I build indicators to make my life easier. And here you can see, here's a long entry. This is a long entry. Here's a stop, and there's the long target. Here is the short entry on this trade. Right here. Here's the short entry right here. See the little purple dot? And then there was my long target. So it actually tells me where to place the trade at. So I just make my life a little bit easier. You can see here's a long trade. Here's the long dot. It tells you to get long here. Here's the stop. And then boom, there's the target. So that's what I do. I just make my life easier. So it's really, really important, in order for your profits to increase, your confidence has to increase. You got to have good money management. You got to have some good entries. You got to have some good exits. And then once that happens, your confidence and your profits will increase, okay? The product is the ZB or the US. That is correct. All right, you got to have some good setups. A good setup unexecuted will beat the pants off of a perfect setup that goes unexecuted. Good is good enough. Don't try to filter out all the losers or the stop outs. That's a fool's game and for suckers only. Enjoy the process of wins and losses, okay? Now, what I'm going to do is I'm going to open it up for questions. Before I open it up to questions, I want to make you a special offer. Oh, stick around, though, because we're going to trade bonds here live. You can see right now on my chart right here. Do you see this? I'm actually bidding on a 135 and 30 seconds right here, or 135 and 3/30 seconds. I've got a bid, and I'm going to show you how to calculate this up so you can do this bond trade with me overnight if you want to, okay? All right, so here's your special offer, and then we're going to trade bonds. So if you go to hubertcenters.com/fast, and I will hyperlink you this link really quick in the chat box really quickly so you can see it and you can go take advantage of this offer. You can also call my office. My team is sitting right behind me right now, and I'm sending that to all, and I'm sending that to all, so you're good to go. So that was 2 of my favorite trade setups in the bond market. And I have an entire course where I teach you all of my favorite trade setups, and I sell it for $197. I also have the best-selling class on Ichimoku, and no, I didn't sneeze. That's an actual technical analysis thing I'll show you in just a second, called Cloud Charting Secrets. I sell that for $197. So the total value is $394. But what I'm going to do is I'm going to allow you to only invest, as soon as I figure out how to advance this slide, $97 for tonight only for the first 100 people. If you go to hubertcenters.com/fast, hubertcenters.com/fast, you can also call our office, area code 859-963-3445. Do you need any special indicators of any kind for those trade setups? A couple of them you do, Dan, but I mean, there's a lot. I teach you let me show you what's in the course. So go to hubertcenters.com/fast. It's in your chat box. Do you provide email support? We provide email support and telephone support. If you call my office right now, you'll get an actual live person. They're sitting right beside me right now. So let me show you exactly what you get in this course, okay? So when you go to that link, you're going to see a website that looks like this. Here's my ugly face. And if you click the Add to Cart button, what it's going to do is it's going to take you to this next page where you check out. And this is an online course. This is part 1, part 2, part 3, part 4, part 5, part 6, part 7. This is not a Mickey Mouse course. This is 8 hours of pure content, okay? And then I did 1 day of live trading and then 2 days of live trading. And then I also teach you how to use the Ichimoku cloud charting secret. So it's 7 hours of education followed by 2 hours of live trading that is pre-recorded. Any money back guarantee if I lose more than I make. Nick, there are no guarantees in life and there are no guarantees in trading. One guarantee I will make you is if you don't absolutely love the trading course, I'll give you your money back. That's the best guarantee I can give you. I can't promise you that you're not going to get a string of losers just the exact same way that I'll get a string of losers. You have to be willing to weather a few storms in trading to make some money. But if you're not, my promise to you is if you're not 100% satisfied, I'll give you a no questions asked guarantee. If you don't love it, I don't want your money, period. I got to sleep at night. I always over-deliver. You are really getting a $400 value for $97, okay? So here's what's in the course. Here's a couple of testimonials from people that I've taught how to trade. Here's Neil and here's Pete saying, hey, I made $1,980 trading bonds and gold. I was up 350 on 3 contracts of the YM. That's one of the trades I teach. And then your technical analysis 101 and Ichimoku course and favorite trades just keeps teaching. Just teach the great stuff. Keep it coming, all right? So here's what I'm going to share with you. In Module 1, it's going to be stock, swing trades, and day trades. In Module 2, I'm going to teach you stock, swings, and day trades. There's 2 modules on that. Module 3, it's all about E-mini day trades. Module 4 is gold and swing trades and day trades. All right? And then Module 5, I'm going to talk about bond swing trades and day trades. And then the bonus is Ichimoku cloud charts. Here's what's in each individual module. All right, Module 1, swing trades and day trades. My favorite ways to scan the markets for swing trades. The best way to scan the markets for day trades. Can you trade? Can U.S. traders? Can us traders trade gold? Yes, you can. How to filter the best trades to take. That's in Module 1. Okay, module 2, I teach you the 7 horseman trades. There are 7 stocks that consistently beat earnings 90% of the time. There are another 7 stocks that consistently beat earnings 80% of the time. Now, you can obviously hear the chaos behind me as people are ordering this on the telephone right now. If you're calling and you don't get a live person, just leave a message. There's 3 people behind me just taking orders as fast as they possibly can, and the phone's ringing off the hook. So there's 7 stocks that beat earnings 90% of the time, and there's 7 stocks that beat earnings 80% of the time. I'm going to teach you how to trade stock gap plays, and then I'm also going to teach you how to trade gap and goes, and then also how to trade gap and crap. So that's all on stock markets. And all right, now that's module 3, not module 2. I can't type. Now in module 3, we're going to talk about all about the E-minis. Now I have a seat on the Chicago Board of Trade, so I know a lot about the E-minis. I actually have a futures IB and a brokerage firm, so I can teach you some cool tricks on that. I'm going to teach you how to trade gaps on index futures, and I'm going to teach you the famous ambush trade, and then I'm going to show you the 85 and 115 fade trade. And then I'm going to show you the crescendo trade, where when you get the trend to spike above 1.50, you've got a real high chance that you're going to get a huge gap up the next day. It's almost like having tomorrow's newspaper today. It's a great trade. And there's a couple folks that just came down and spent 2 days with me here at the Bat Cave, which is kind of a weird story. I actually have a secret bookcase door that leads into my office, and we call it the Bat Cave as a joke. When I was a kid growing up with no money, I always watched a lot of Scooby-Doo and Ghost of Mr. Chicken, and I always decided that if I had a lot of money, I was going to be like secret passageways and doorways and bookcase doors into my house. So I actually did it, and it's pretty neat. So you're going to learn the crescendo trade setup. All right, that's module 3 and 4. Then after that, we're going to talk about the famous goodnight gold trade, where you risk $600 to potentially make $6,000. I'm going to show you the gold rush trade, the gold bug trade. Now, the cool thing about it is you pretty much already have one module. All right, so I've taught you how to do the overnight bond trade. I taught you that tonight, okay? And then I also taught you the sneak attack trade. So I've already taught you these 2 modules. So if you like the teaching and the education that I gave you tonight in module 5, you're probably going to like the rest of the course. FOMC day is tomorrow. Did you say not to trade that day? No. On bonds, you just have to be careful. Now, here's a tip for you on FOMC day. FOMC. There's a trade that I call the FOMC 1, 2, 3 trade. So on the E-minis, here's what's going to happen. You're going to get a news release, and the FOMC is either going to go up, down, and then up, or it's going to go down, up, down. So from move 1 to move 2, avoid that. From move 2 to move 3, avoid that. You want to get in at the beginning of move 3. Now, if it goes down first, you're going to avoid move 1 and 2, and then you're going to get in at the beginning of move 3. That's actually in that course. And that's a really good trade to do on FOMC day. And that's for the E-minis. Now for the bonus, it's Ichimoku, Ichimoku explained, Ichimoku in action. And here is the link again, and I'm going to start answering questions. Go to hubertcenters.com/fast for $97. Deadline is for the first 100 people. hubertcenters.com/fast. Time frame, I use a 2-minute chart on that trade. And then I'm going to actually give you the telephone number here. You can see it on the screen, area code 859-963-3445. So, all right, so I've done my job. Now let me answer the questions for you. Hubert, does the course come with a DVD form also? It does not have a DVD. It is a streaming video online that you can watch at any time. Do you just send pics? No, I've got an alert system. But I don't just send pics. This is an educational course for my favorite trades. I do have a subscription service. Do you support for live trading? I do have a live trading room. If you want, after you buy this course, you can take a 30-day trial for $7 and see how you like that. How long do we have access to the stream? Rick, either until you die or until I die. It's going to be up forever but I know neither one of us is going to get out alive, so sooner or later somebody will stop paying that hosting bill, right? I get the hint that stock options are not your favorites. Oh, no, I trade stock options. I have better experts that trade stock options than I do. And, they're just better stock options traders than I am. Like, so I mean, if you want, I can turn you on to those guys. Do you have a trading room now at your new company? Do you run it, or does someone else? Bill, I do have a trading room at hubertcenters.com. It's the Hubert Centers Inner Circle membership site. I'm in there about 1 day a week, and then then I have other guys that run it the rest of the week. But one of the cool things, like, you don't have to be in the trading room because I have an alert service where I can send an alert to your PC and tell you what I'm trading in real time. All 5 modules for only $97. That is correct. You get that. You get all 5 modules plus the cloud charting secrets right here, which is $197. You also get that included. It's all $97. You get it for 1/4 the price. Can you talk about the sneak attack trade and the overnight as it would apply to the 10-year? So, Greg, the 10-year is a little bit different. You have to use a little bit different setup on the 10-year than you do the 30-year, because they trade in 1/64 instead of 30 seconds. You could do the same trade. You just got to modify it a little bit. Hubert, just recently took you up on your offer. Good stuff so far. Can the cloud be used on futures or just equities? Clouds can be used on everything. Ichimoku cloud charting secrets can be used on everything. It is a great technical analysis stuff. Also, alerts will be included. The alerts are not included. They are included in the trial if you take me up on the $7 30-day trial. Yes, that's included in that. But it's not included in the course. Did you say that the pit open is 8:20 Eastern? Are you using a 5-minute chart? I'm using a 1-minute chart, and yes, the pit opens at 8:20. Can you trade your strategies with options on futures? You can, Nick, but I'm not a huge fan of options on futures, but you could do it. This is shocking. I did it, but it seems very, very cheap. Why does someone with your obvious genius want to do this? So, Michael, here's the reason I'm trying to get you to buy this or invest in yourself for $97. I'm going to show you some of my best stuff in my favorite trade setups right now. If you end up liking the course, then you'll probably buy another course on down the road. Like this week, just today, I was teaching Gold Trading Secrets, and the Gold Trading Secrets course is $997 if you've never taken it. It's it's $497 if you're a member of my subscription site, or if you've took it before, it's $297. So I have more expensive courses that I sell, and what I'm trying to do is give you a lot of value for a very inexpensive investment. And then on down the line, if you have good vibes, you like me and I like you, you may want to take another course or two. That's the honest to God reason why I do it. If I overkill you with value, then you'll probably want to purchase something else from me on down the line. How much money to open up an account? It's different for every different futures broker, so you need to call your brokers. I'm also doing the Wednesday 5 Power for Trading Essentials. Okay, that's a different course. That is a different course, yes. You called the reversal the 8, 12, and 16, but you told us to wait for 8 tick. What about the 12 or the 16? So the 8 tick would be aggressive. The 12 tick would be moderate, and the 16 tick would be really, really conservative. So in other words, if the bonds are moving like this, if they pull back 8 ticks, then they're probably going to continue lower. If they pull back 12 ticks, so you just have to pick, are you going to do an 8-tick reversal, a 12-tick reversal, or a 16-tick reversal? You can't do all three, so you really need to pick 2. So I would either pick the 8 and the 16, or the 8 and the 12, or the 12 and the 16. But there's going to be overlap there with that 5-tick stop loss, so you got to figure out really which one you want to trade, really. How do you short the bonds? You just short them. You just short them just like you would long or short anything else. Thank you. Great teaching. If we get stopped out on 5, would you take the same trade on the 16? Yes, I would, Dave. I would take the 8 and the 16. I probably wouldn't do the 12. I'm interested on your stock module. Thank you, Mike. So if you want to take the course, to sign up at hubertcenters.com/fast. Do you always have a lifetime access to the course if you purchase it? Yes, you do. It's a lifetime access, either your lifetime or my lifetime. Sorry if I missed it, but you said to find the daily trend, but what time frame do you trade on? I trade in real time. So let's take a look at the bond market really quick, okay? So I'm going to write down the number so I don't have to cover it up. 859-963-3445. grab your wallet out of your pocket or your credit card and go to hubertcenters.com/fest and learn my favorite trade setups, okay? Here, let's take a look at the bond market, all right? So let's go to the bond market here. I'm gonna blow this chart up. We're gonna go at US. Can everybody see my trade station? So this is what I call, this is Ichimoku Cloud, and this is a great way to break down technical analysis. So what we're looking at here on this setup is Ichimoku Cloud. You can see that we've got a nice little movement to the downside, and you can see this is a massive downtrend on the daily. Now what we're looking at here is on this side of things. Hold on, I'm going to hit the record button here so I can draw. So if you can see my chart, you're probably looking at, you've got this price action is above this cloud. This cloud is now blue, and you see where this little blue line jumped over this cloud? Well, that means bonds are in an uptrend. So if we've got the bonds in an uptrend, what do we want to do on the 8, 12, or 16 tick reversal? Let's kind of try to figure out where this is going to go to too. So what I'm going to do is I'm going to break this down to a weekly. Okay, so it's probably going to go there. All right, I'm going to go to a daily, and then I'm going to take a Fibonacci, and I'm going to go from this high to this low. The bonds are probably going to go to 137 in 20, 30 seconds as a good target. Okay, so they're probably going to go to 137 in 23, 30 seconds. So now that I've got that pegged, then I want to go over here to the Trade It tab. Now, you remember when we talked about if the bond market is in an uptrend, they opened up right here at 6 o'clock. Do you see that? Now, here's all I do. That's the high move of that bond market today. How many tick reversals am I going to try to buy? What am I doing? So if this was the high, I want to place an 8-tick reversal order down here. So 135, 13, 30 seconds, right? And then I'm going to come down here and try to do that. Okay? Now, if you don't want to do it that way, what you can do is you can just, if you don't want to use the indicator, which is fine, I just do it because it's easy. Watch how you can do this. You can say, okay, there was the high, and then you can retrace 8 ticks. Now, let's say you're going to take the high of this overnight session, okay? The high of the overnight session. We'll just do it all manually. You see that high water mark there at 135, 12, 30 seconds that I just marked right here. Do you see that? I know that bonds are in an up mood. I want to be really aggressive on my entry. I want to buy an 8-tick reversal. 12 minus 8 is what? Somebody do the math for me. 4, right? So I want to place my bid right here. 135 and 430 seconds. So watch how you do this. I'm going to cancel this order. I'm going to make sure that the GTC is selected. I want to make sure that I'm risking 5 ticks to potentially make 32 ticks. See, I'm risking 5 to make 32. And I'm going to hit OK. And then I'm going to come down here and I'm going to go down to 135 and 430 seconds right here. And I'm going to place my buy order. I'm risking 5 ticks to make 32 ticks. Do you see that? Is a $10,000 account enough to trade bonds? Yeah, you could trade bonds with $5,000 if you wanted to. So, do you see how thick these are? You see where look how thick these things are. Look how many contracts are already on these. Very, very thick. Okay. Now this is the overnight session, and it's still very, very thick. So does everybody understand where I'm going to try to enter these things? I'm buying them if they retrace to 135 and 430 seconds. Hopefully I don't get stopped out, and boom, I wake up in the morning, and I'll either be stopped out or I'll be happy. One of the two. Why did you decide whether to be aggressive? How do you decide? So if I know we're in a really good massive uptrend, I want to be aggressive on the pullback. I don't think it may not retrace. This trade may not retrace and let me buy it. It might not even pull back 8 ticks. It might go less than 8 ticks. So I want it to pull back minimum of 8 ticks so I can get in. It may only pull back 4 and then continue higher. We're in a really good uptrend, so I want to make sure that I take advantage of that. Do you have a bond course specifically? I do have another bond course where I teach all of my bond trading. It's called Bond Trading Bootcamp. I also have Gold Trading Secrets. They're higher courses. This will get you, if you buy this course, you'll make enough money to purchase that course. Why not use yesterday's high? You can. There's nothing wrong with that. If you want to use yesterday's high, which was today, really, I mean, you could use this. You could come up here and go, okay, instead of 12, we're going to use 13. And then what you would do is you just bump up your order. Instead of 4:30 seconds, you would say 5:30 seconds, and you could just do there. I mean, it's just a tick. I mean, it's not a huge difference. How late in the night will you keep adjusting your 8-tick entry before calling it a night? Usually I'll keep doing it until about 11:30 at night. I do a trade called the Good Night Gold trade, where I'll keep, like if we made a new high to 136 and 16, I'd adjust it 8 ticks off of that. Thanks, I received the link. Yeah, if you purchased, just give our email system a little bit. They'll send you an email link with the confirmation to a download link with a password that you can have. Do you have to keep watching the market once the order is placed, or just let it ride? A lot of times, I'll just leave it on at night and just wait for it to get filled. So you don't have to watch it and stare at it if you don't want to. I know a lot of people are a little scared, a little skittish on putting a trade on overnight and holding it. So if you've got a stop loss, you'll probably be just fine. So don't freak out too much. So that's the bond trade. Now let me show you one thing here on Ichimoku Cloud Charting Secrets. So this is part of the Ichimoku Cloud Charting Secrets course. Ichimoku Cloud Charting Secrets. This is your bonus. It's the #1 technique used in Japan. It's had 7 years back-to-back being the #1 best-selling technical analysis book. Okay, it's designed to produce very clear signals. It identifies trends really, really quickly in seconds. So I'm on slide 90 right now, and if there's 166 slides just in the bonus of the Ichimoku. So I want to show you like what we're going to go through on the Ichimoku. I'm going to show you exactly what this technical analysis strategy, and every platform out there has it. I looked at your Ichimoku course, and it works great. Oh, you took it. Ron, thank you very much. I really appreciate it. Why are bonds so steady, and who trades bonds? Everybody trades bonds. Hedge funds trade bonds. Municipals trades bonds. Tons of union trade bonds. So everybody in the world trades bonds. They're very, very thick. So this course teaches you, like, all right, this is a sell signal. When it crossed here, you can see Apple, and then when Apple crossed up here, it's a buy signal. So it goes through in painstakingly detail and shows you how the lines are calculated, what they're calculating, what all the lines' names are. This will probably impress you more than anything, is the back testing on this strategy. You're going to go through the bullish signs, the bearish signs, and let me show you this little back testing model right here. If you use the Ichimoku strategy the way I teach you, based upon the S&P 500 over the past 5 years, you could potentially make a 33% on your return if you do it the bad way. If you do it the good way, it increases your return to 79% if you use a 3-day confirmation. And I teach you in this course how to do that. Now, also on currency futures, if you trade currency futures or if you trade currencies, it was profitable on 29 currency pairs over the past 10 years using the daily, hourly, 10-minute time frame. Daily, hourly, and hourly 10-minute. My preferred is the daily 60-10 is what I like to use, but I'm also going to teach you that. And here's one of the cool things. Anytime you get a signal on an hourly chart, then the market's either going to move up 3 days or down 3 days, so you've got a good little pop to go for. If you're going to do a very short time frame, like a 10-minute time frame, then that trade is going to be good for 2 to 4 hours of movement. So, pick up the bonus. It's definitely worth its weight in gold. So I'm going to go back to the offer slide that you can have here, and I'll continue to answer questions as long as you ask them. So how did I do on the little Bond 101 course? Do you think you got a good handle on bonds, and do you think you'll be able to trade them tomorrow, or at least try them? Let's see here. Yes. All right. So here's your link. How long do you need to hold the overnight or longer? So John, you're either going to hold it until you get stopped out or until you make $1,000. Sorry to bother you, but I can't find out about sorry to bother you, but how do I find out about your specific bond course? Art, that course is priced at $497 to $997. Take this course first. It's only $97, and then if you like this course, I'll tell you about that other course. That way, you'll have a good overall knowledge of the trading strategies. Will the recording of this be up tomorrow? Hopefully it will. Just bought the course online. Thank you, Dan. I appreciate it. Thank you, Art. I appreciate it. So you don't take profit sooner. Not usually, George. Sometimes I will, but I've got a pretty good plan with risk 156 to make 1,000. Can you trade 5-minute futures with a cloud? Yes, you can. You can trade the 5-minute futures on a cloud. Let me show you really quickly here. Let's say you did a 5-minute. Oh, let's do a 10-minute futures here on. Let's go at YM. So on the YM, on a 10-minute trade, here's the YM. You can probably see the chart right now, right? Here you had a signal to go long here and here on the Dow. That was about 15,500. And since that time, you've got up to 15,609. And here were your signals right here on the Ichimoku. It jumped above the cloud here, and then the lagging line went above. That gives you a signal to get long, and then you should be holding long and buying here on this area right there. Do you teach how to place orders on the trade? Yeah, on the live trading session, I go through and do it just like I just showed you here in the Trade It tab. All right, we're going to place a trade. Here's our buy stop, here's our sell stop, here's our target, and all that good stuff. I got the cloud trading, and I got the cloud trading with the basic course. Thank you, George. I appreciate it. Trade mostly E-minis, but have a problem getting out of bad trades. Dan, are you using hard stops? Hubert, I came in very late and missed most and still purchased. Mo, thank you very much. I appreciate it. All right, Dan, you got to use hard stops. If you don't use hard stops, you're gonna die dead broke. You're just gonna go bankrupt, brother. If you trade without stops, it's a recipe for disaster. So if you are bullish on the ZB, are you bearish the ES? No. That is a great question, Jerry. Check this out. So let's go over to the videos. So the bond market looks good. It's probably going to go to 137 in 30 seconds. Does the ES look like that's bearish? Now, what you want to make sure that you don't fall into is for all the BS that everybody will tell you, like, well, if the ES goes up, then the bond market should go down. That's not always true. Some of the times they move together. Sometimes they move apart. And it just all depends on what's going on. Correlations are great until they don't work. Correlations work until they don't. Can brokers follow your trades? They should be able to follow them very easy. What is my favorite trade setups right now? What is my favorite trade setups right now? It's a course where I teach you all of my favorite trades in the different markets that I trade on a daily basis, is what my favorite trades is. So go to, let me give you the link one more time. hubertcenters.com/fast. Send to all. Let me send you this. Boom, there. You can also call the office, area code 859-963-3445. If the trend is sideways, will Ichimoku work? Not great, no. Do you trade oil? Yes, I do trade crude oil. What are the trading room hours from 9:30 until 4:30? I just saw the 97 offer, LOL. John. Okay. The $97 offer? Okay. Do you have a course specifically on oil? I do not have a course specifically on oil. Are you still bullish on the GC? I am bullish. Let me check. Let me see what the GC is at right now. Hold on. Yeah, GC. Hold on. At GC. Type it in right. I'm right now on gold. Like, here's a trade that we did tonight in the gold trading secrets course tonight. It's called a gold wiggle trade. So I wouldn't say that I'm bullish gold. I would say it's kind of sideways, because if you look here on the video tab on the chart, you see where it's below the cloud? Well, it needs to be below the cloud to be bearish and above the cloud to be bullish. So tonight it's crossing below the cloud. So I would say tonight I'm more bearish on gold than I am bullish. And then I would confirm that with this little gold wiggle trade that we've been in since, I don't know, 6 o'clock. We did an open trade here on a breakaway to the downside, and this is one of the trade setups that, oddly enough, you'll get a modified version of this in my favorite trades. And you can see at one point in time on this trade, we were up $530, and we only risked $150 on this trade so far. So you'll get a modified version of this trade in my favorite trade setups. Do you trade Forex? I do trade Forex. I trade currency futures and spot Forex. What do you trade in the trading room, and what are the hours? The hours are 9:30 till 4:30 Monday through Friday. Currently, I'm in there every Monday from 9:30 to 11:30, and we trade anything and everything. I'm new. I don't have a broker. Can you recommend one? TradeStation, Thinkorswim, IB, any of those guys are good. Where do we actually go to the website to purchase the $97 offer? You go to hubertcenters.com/fast. There should be a link in your chat box. And if you don't want to order online, Jared and Susan are right behind me, and they will assist you. Just call area code 859-963-3445. Does Module 1 and 2 include options trades for stocks? Robert, they do not. No. Great website. Thank you, Dan. I appreciate it. How is Tiny? He missed his webinar. Tiny's doing okay. They put him back in intensive care. He had the thyroid cancer, which is really treatable, but he had some complications where his esophagus started swelling and closing up on him, so they readmitted him to ICU. But he's doing better. Do you recommend a percentage of one's account as a max risk per trade? Yeah, that's more of a personal issue, but you never want to risk more than, say, 2% on any given trade. A lot of times I don't risk more than 0.5% on a trade. So, yeah, it's a good idea. It's a good idea to always do that. What is the monthly fee for the trading room? So for me, I run just one price for everything. It's $97 for my live trading room, and you also get, for a member of HSIC, you get free videos every day. You get a member video. You get a member video every day on what I'm looking at and what I'm trading. You also get an alert software where I pop through you the trades that I'm taking and what I think about the markets. You get a live trading room, and then you get member webinars and member discounts. What indicator do you use? I use all kinds of different indicators. I've got tons of different ones that I use. Is the Ichimoku charts plotted somewhere? I don't think. Thinkorswim does have them. They're called Ichimoku. They're included in TOS, absolutely free. You don't have to buy anything. I'll just teach you how to use them. But they are in TOS. It should just be called Ichimoku under studies or something like that. This $97 is a one-time purchase, correct? That is correct, Matt. So when you buy this course for $97 right here, then what happens is, after you do that on the thank you page, then there'll be another button here. It'll say, hey, would you like to take a $7 trial for 30 days to HSIC? Now, if you continue past 30 days, it'll be $97. But if you don't want to take this special offer, just say no thanks. It's not a big deal. Are they in TradeStation? They are in TradeStation. This chart that I showed you right here, on this example right here, this is TradeStation right here. That is Ichimoku on TradeStation. Here's like AAPL. You can see Apple. It signaled a low here in Apple at 440, telling you to get long. It also said rebuy at 440, rebuy at 480, and keep on going higher. So this is Ichimoku on TradeStation, and you can see how powerful a technical analysis tool that it is. So to trade bonds, you would need at least $7,800 to risk 2%. Well, futures are very leveraged, Nick, so you don't have to have all that in there if you use your risk and reward parameters correctly. But yeah, obviously more money is better. But no, you don't have to have nowhere near 2% if you don't want to. And let me hit you in the POW. Here you go. Does the cloud indicator run on Ninja? Yeah, they have an Ichimoku version in Ninja. Many markets only clearly trend about a third of the time. Does the bond market clearly trend more frequently than that? Well, let's take a look at it really quick. Discard. Let's say here's at US, and you can tell me whether you think that market trends better than most. It's a pretty good trending market. It had a really good aggressive up move. Now it had a really good aggressive down move, and now it's starting to aggressively move back up. So yes, I believe that the bond market trends very, very well. That's why I'm recommending that you trade it. I just want to be clear. I don't care what you trade. If you were trading, bumblebees and you were making money at it, I would be tickled to death for you. If you're trading with the trend on the bond trade, can I assume you ignore the indicators on it? If you when you say indicators on it, what are you talking about, Dave? So a lot of my indicators will confirm a trend, not deny a trend. So I'm not really sure what you're asking. If you're trading with the trend on the bonds, can I assume that you ignore indicators on it? Most of my trades on bonds don't require indicators. You just want something to filter out the daily trend, and then we're looking for to either short retracements or buy retracements. So yeah. What are your best and worst stocks to trade? What are your best and worst stocks to trade? Mike, that would probably depend on the day. If I'm losing money on a stock, I would probably call it a dog. Thank you for your time, Jerry. Appreciate it. Thank you. The best stocks to trade, the best stocks to trade are the ones that are moving. Like right now, I'm in LMT. I'm in some JCPenney. I'm in some Tesla short. I trade a lot of different stocks. So the best stocks are the ones that are moving and making you money, and the worst stocks are the ones that are not moving and not making you money. Good presentation. Thank you, Jim. I appreciate it. Hubert, do you always establish a trend from the daily chart and trade on a 60? I always try to stay on the overall daily trend of the daily and the 60-minute chart and then use that as my anchor to trade around. But there are some times where I don't really care what the trend is. If, gold's breaking out and I want to get some, I'll get some. What does it mean assisting in building a new indicator this month? Oh, in the membership site? So if you do a trial, then what we did last month is we built this indicator. Let me show you. Insert analysis technique, and then this indicator right here you get for free as a member of HSIC. It says Hubert Center's retracement lines. So what I can do here on TradeStation, instead of calculating these lines, I can just go, okay, I can go Control, click. And you can see right here, you see this indicator that just popped up on there? Well, that's an 8-tick reversal. That's a 12-tick reversal. That's a 16-tick reversal. So the entry's here, my stop is here, target 1, target 2. So we built this as a community of HSIC members, and it makes it really easy so you don't have to do the math, and that's included. Right now it's only for TradeStation. We just completed it this past month for the members, and I will be building it this month for TOS and Ninja and eSignal and all the other data vendors. So yeah. Can your method be traded in the off hours, work during the daytime hours? Yes, Joe. I have specifically 3 really, really powerful trade setups for people that have jobs and just want to place trades at night. Good webinar. I ordered it, so I'm going to take a look at the modules now. Michael, thank you. If you guys have any questions whatsoever, you can, let me give you the support email. It's support@hubertcenters.com, support@hubertcenters.com. You can also call the office where you ordered it tonight. It's area code 859-963-3445. Does the indicator include it in the $97 course? It is not, but if you want to do a trial to our membership site, you get this indicator for part of your membership. But no, there's not an indicator included in the course. I have signed up. Thank you very much. How much do you pay in round turn commissions? Nick, I own my own futures IB, so I don't pay a lot of money for round turns. I have a seat on the Chicago Board of Trade, so my commissions are very, very inexpensive. And I also own a futures IB, so I get to set my own prices. So I don't really have to pay retail commissions unless I want to, and I choose not to. What is the cloud indicator called in TOS? Ordered the course, So Scott, that's all covered in the course, but here's how you find that. In TradeStation, what you're going to do is you're going to open up a chart, and here's what you got to do in TradeStation to make the Ichimoku work. So first, you're going to have to do this. Go right-click, and then go Format Window. From the Format Window tab, click the General tab, and you see where it says spaces to the right? Make sure that's at least 30. At least 30. $7 for an E-mini trade is way too high, Dan. The industry standard is $4.50 or $5. That's the retail. Now, once you've done that, then you go right-click, insert analysis technique, and then come up here and look for something that says Ichi. All right, it's right underneath my name here. It says Ichimoku Cloud. Ichimoku sounds like a sneeze. Click that, hit OK. Once you do that, hit OK one more time, and then the cloud will show up. If you don't do at least 25 or 30 bars to the right, it'll throw you out an error, and it'll go, there's something wrong. You did something wrong. So just make sure you have 25 to 30 spaces to the right. What about in TOS? In TOS, I don't have TOS loaded up on this machine, but I think it's under Studies. Can we join your futures IB? Not at this time, Sean. Sorry. What is the cloud called? Great. Thank you very much. So hopefully that helps you out. Okay. Here's the link again. All right, cool. Let me see here. Got any more questions? We still got tons of people in here, so I'll stay until you get all your questions asked. So any other questions? Yep. TOS is under Studies. There you go. Sorry, could you show how to add the clouds again? All right, so one more time. So first go right-click, and you have to go Format Window. Okay? Under Format Window, do you see where it says General? Make sure you go spaces to the right, and then you want to have 30 bars, at least 25 or 30 bars. If you don't, it's not going to work. Okay? Awesome. We only have 34 more slots left. As of right now, only 34 slots left. So grab your spot, okay? Once you do that, then you're going to go right-click, and you're going to go Insert Analysis Technique. Under the Indicator tab, you're going to come all the way down here to where it says Ichimoku, I-C-H-I-M-O-K-U Cloud. Now, once you do that, hit OK to everything, and it'll apply. Now, you do need to make sure you upgrade to TradeStation. I'm on 9.1 build 22. So you might want to upgrade to at least 9.1 build 22. It might work on older ones, but I'm not sure. Thank you for your time. Looking forward to working with you in the future on more stuff. Thanks, Michael. Thanks for a great webinar. I'm off to study the course. Thank you, Larry. I appreciate it. Thanks for a great webinar. Nick, thank you. Many thanks, Hubert. Thank you, Sean. You're very welcome. I paid $23 a round turn on T-bonds. Jesus. Sorry. $23.16 is highway robbery. You are getting raped. You said I should be paying $4 to $7 a round turn. I should switch. Nick, you need to email me so I can help you so you quit getting ripped off. Email us support@hubertcenters.com. $23.16 for a round turn on T-bonds is ridiculous. Somebody is killing you. Email our support department and we'll hook you up to a good broker. You have put your broker's kid through private school by paying it. Is the trading room open every day or possible just once per week? No, it's open every day. I'm only in there one day a week. But I've got other traders that are in there throughout the week. On Wednesday's course will Wednesday's course have weekly options, power for trading essentials? Robert, I'm not sure what you're talking about. We do a lot of different webinars, but I'm not sure what you're talking about. Great information. I will look for you on Saturday. Thank you. I appreciate it. Got it. Thank you. So here's the link. Like I said, we only have 34 more spots available. Here is your link, and I hear Bob on the phone with Susanna right now. Bob, thank you very much. I must be very old. Way back, full service brokers, $50 a side was real high, Jack. Now everything $4 or $5 a round turn. I mean, worst case scenario, you might get, $5 or $6 on a bond trade or something like that, but it's very rare. Yeah, back in the 90s, it was awesome to mess with, Lynn Waldock when they'd call like, yes, sir, I can give you $50 a round turn. You're like, really? $50 whole dollars? That's good. I only trade 3,000 lots a week. That's going to save me some money. And they would go crazy, and you're like, yeah, dude, I don't pay retail. I've known Hubert. I've known Hubert since the TTM days, and he's an over deliverer. Thank you, Scott. I appreciate that. How long have you been trading? About 18 years. Just signed up. Looking forward to your content. Thank you, Ralph. I appreciate it. For those that are on the fence, oh, Scott, thanks. I really appreciate that. Hubert, do you do any 1-to-1 trading? I do. I only do them a couple times a year, Sean. I don't do any one-on-one. I do, but it's very expensive. It's like $25,000. What I do is I do a small group of people right here at the Bat Cave, anywhere from 3 to 5 people or 3 to 8 people, and that's 2 days for $5,000 where you come in and we make you a detailed trading plan, and we basically put you through, all the hoops, and then we do a one-on-one call once a month with you and stuff like that. But yeah, we do it. I only do it a couple times a year though. I do it once in the spring, once in the fall. Thanks, Hubert. Great webinar. I have your offer, $97. Thank you, Gary. I appreciate it. Signed up, looking forward to it. I also used to be a CBOT member, trading Dow in the pit. Nice, Michael. Nice. Hey, you can buy those suckers real cheap right now, Michael. They're only like $3,000. You know what? Like an IDEM seat right now is like 33 by 35, I think. And I don't mean 1,000. I mean 3,300 by 3,500. Super cheap. You got to pick you up a couple. How do you find out, please, Sean? Sean, email us. Email us support@hubertcenters.com and tell them you're interested in a mentorship, and they'll talk to you about it. We put you through an application process. Thank you for the information. Have a good night. How many bond contracts do you trade overnight? For me personally, I trade anywhere from 1 to 10. 1 to 10, depending on my confidence level on the trade. I'm toiling with it. If I trade more than 20 a day, you save in commissions. Michael, if you trade more than 5 a day, it pays for itself. Yeah. I mean, if you look at it as an investment, you know what I'm saying? I mean, you can always buy one and lease one. Do you see gold heading down to 1170 and lower, maybe 900 to 7? I think gold's going to go down to 1,000 to 800. Do you have a filter to search for stocks? Yes, and in the course we go through a filter of how to search stuff for stocks. Yes. Do you see do you see JCP heading lower, or is it about done? So JCPenney is looking like it's going to be a good January effect for tax loss selling. So I'd pick that up on the buy side and use a tight stop. Is what I would do. All right. HubertCenters.com/fast. Here's the link. There are less than 30 slots available. So they will sell out, so make sure you get one. I want to go ahead and thank you for showing up for the webinar. I really appreciate it. Thank you very much. Best seminar for the price. Thank you very much, Jim. I appreciate it. Let me see. So let's wrap this puppy up. So any more questions? If not, I'm gonna take off. I got another. I'm doing a gold trading secrets course tonight where we're doing gold trading at 11:30. So I'm gonna wrap this up. Thank you very much for showing up. Like I said, I really appreciate it. Good luck. Hope it helps. I'll see you on the nightly videos, and then I'll also see you on the next webinar. If you have any questions whatsoever on any material covered in the course, please don't hesitate to email us at support@hubertcenters.com. Also, feel free to call us at area code 859-963-3445. Good luck. Hope it helps, and I'll see you on the next webinar.